Want to avoid trading commission while buying and selling the shares in stock market? Or feel like paying too much MER price while buying mutual funds? Have no idea which company is best to invest? Have only few $100 but wishing to hold big company shares like Apple, Amazon and want profit from them? Is this all can happen with just one trade? Yes, it can. Check this video until the end and you can find it how. Hi friends, welcome to Passive Income. In previous video we looked at mutual funds and how it works. In this video I am going to share what exactly is an ETFs are and going to see the difference and similarity between ETFs, mutual funds and stocks. ETFs holds combination of stock or bond or securities similar to mutual funds. Then what makes the difference? There is difference between lime and lemon, right? Same way there is a little difference between both. They are their MERE rate, trading flexibilities, initial investment and most important active and passive management style. Mostly on ETFs are low percentage of MER fees or no fees. This is because ETFs follow a passive management style where mutual funds are active management. We can trade ETFs during market hours, but mutual funds are traded only after the market hours. ETFs got the advantage of both stocks and mutual funds, like the low fees or no fees when compared to mutual funds, and at the same time we can enjoy the diversification factor. What I am thinking is the ETFs are going to rule the market in the future. So are you a new investor or a seasoned investor? Please have some ETFs on your portfolio and thank me later. When you go buy an ETF, you are essentially buying one bundle that holds multiple investments. In case some go down in price or value, others may rise and give you a balance. Normally, ETFs are a basket holding hundreds of stocks or combinations which are created and comes to the market with a price tag. Like the combo of real estate sector ETFs, financial or bank sectors ETFs, technology sector ETFs, or even government bonds or commodities like oil, gold, and currencies as well. Actually, there is no end for that. All you have to do is to go find the good ETF. If you want some, I can share my ETFs watch list in this video later, so watch it until the end. As we see, there's a lot of advantage in ETFs you can count on, like there are bundle of stocks in one basket similar to mutual fund but no MERE fee or low fee. Trade intraday similarly like stocks. We can buy or sell as many times as we wish during the market time, where we can't do it in mutual funds. And it doesn't require any minimum initial investment amount, whereas mutual funds typically require an initial investment. Also, we enjoying diversification which we can't do it in stocks. For an easy understanding, ETFs are a hybrid of stocks and mutual fund. Now there is a big question that comes to mind, right? Where there is no disadvantage in ETFs? Well, there is. It is not managed actively like mutual fund, but passively managed. The other disadvantage is most of the ETFs are focused on a particular sector, like financial sector ETFs or technology index ETFs kind of stuffs. So in that case, if that particular sector doesn't do well or got a hit, the ETFs will go down as well. As we know, they don't maintain actively. We need to monitor it regularly by ourselves. It's a little bit of time consuming job. Okay, let's go check what's the ETFs I got it in my watch list. Remember, I am sharing my watch list, but you can find lots and better in the market with your own research. There you go. My first one is VDY, Vanguard FTSE Canadian High Dividend Yield Index ETF. Second one is XCV, iShares Canadian Value Index. Third one, XDV, iShares Canadian Select Dividend Index. Fourth one, FBE, CI First Asset Canadian Buyback Index ETF. And the last, my all-time favorite is XIU, iShares S&P TSX 60 Index ETF. This is the historical chart of VDY ETFs, which shows the growth of $10,000. Whoever invested in the end of 2012 will get nearly 18K now. The chart comparing VDY with Canadian Dividend and Income Equity. Here we can see the annual return percentage, where 2019 and 16 are worst, but in 2017 and the last year it returns are more than 20%. Where the last year most of the stock in this ETFs did very well. These funds invest primarily in common stock of Canadian companies that pay dividend, mostly in the bank sector. This one is FBE, First Asset Canadian Buyback ETFs, turnover, annual report, expense ratio and yield details. We can see the expense ratio is 0.60% only, which is very low when comparing with mutual or other ETF funds. But the turnover is nearly 50%, that is 49.71%. And here we can see XIU funds details. Last year it gives 21.72%. In 10-year time it doubled up 10K to 20K, actually little more than 20,000, which also 3,000 more than Canadian equity when you compare. Here we can look its turnover, 245.40% with expense ratio 0.15% only. Again, it's FBE comparing with Canadian equity from 2016 to 2020. The invest of 10,000 became 13,000 in 4-year time period with yield of 16.64% return from last year, where 2019 was 5.43% minus and 2018 got 13.30%. These are the details of XCV iShares Canadian Value Index Fund details, their assets, yield, turnover, expense ratio. You can see 3.49% yield with 42.42% turnover and 0.50% expense ratio. The growth of 10K in XDV iShares Canadian Select Dividend Index comparing with Canadian Dividend and Income Equity. The 10K turned to 20K and little more now, where last year return is 21.25%. We can notice that this ETF got up and downs more when comparing to others. If you got some notable ETFs, please comment it in comment box, and also please share the video with your friends and family. Someone may find it useful. If you not yet subscribed this channel, please do subscribe and give me thumbs up. We'll come up with another video soon. If you got any suggestion or sections I want to cover or share, please tell in comments. Bye for now.